What's up, everybody? Just let me know in the comments if you guys can hear me. If the voice chat is working. Citadel says thoughts on AMC. That's pretty funny, man. That is pretty funny. Why don't you tell me, Citadel? That is pretty funny. Why don't you tell me, Citadel? That is pretty funny. Why don't you tell me, Citadel? That is pretty funny. Alright, guys, sorry about the echo. Just trying to fix up the audio. Alright, so I'm going to go over AMC in a second. Can you guys just let me know how the sound is? If the sound is working alright. Yeah, I saw that. Jim Cramer bashing meme stocks again. Let's delete this. AMC. JP, what's up, man? Is there still an echo? Let me know if there's still an echo. I think I fixed it up, but could be not. Alright, no echo. Okay, so Citadel, 0.786 from where, man? I'm wondering where you see that. 0.786. I mean, it looks like we're making fresh lows, if I'm being honest. You're talking about from here? Macro? Let's see. I wouldn't say that's 0.786. Well, where are you drawing your fib from? Because I'm really not sure where you're looking at. I mean, we're way past the 0.786. All-time highs? Yeah, I mean, that's what I did. Alright, but I mean, I could show you how it looks on a Nimoy. So, a Nimoy, pretty straightforward. You know, once you get the hourly trigger crossed below the daily trigger, that's really bearish. Yeah, JP, I'll get to that in a second, and that's actually what I want to show you guys in a minute. But, you know, if you're trading in and out of a position, let's say you have a whole lot of shares, and you don't like options too much to track and stuff like that, and you just want to be able to hold your shares, but at the same time, you know, make some money in the market as opposed to just buying and holding for multiple years and learning so much knowledge and not being able to do anything with it. There's a couple of ways you can do this. You can do the hourly trigger, daily trigger thing where if the hourly trigger is below the daily trigger, you're out of your position. So you can see it here, but if I just show you these two triggers, you see how the hourly trigger is below the daily trigger. So before May, the hourly trigger sold below the daily trigger. You could have sold then and bought back right here at 641. Then, let me get rid of this. Then you could have held your position the entire time from right here, from this trigger cross from 650, bought back at 970, and then, and sold at 970. Then you could have bought back 930, sold at 940, and look how safe you would be from this whole downslide. And if you don't want to do that, you want to be a drop more active, you could just trade in and out of the hourly trigger. So, you know, let's take a look at each separate segment and see how well you could have done. All right, so maybe here you would have got a little chopped up, but you would have sold here at about 766, and you could have bought back at $6. And then again here, maybe you would have got a little chopped up, but you would have sold again at 630, bought back at 570, sold here. You know, you could have just traded in and out of your position just based on the hourly trigger. And granted, there is a lot of chop here, but if you look at the daily trigger, you could see that price was below the majority of the time. You know, and then there's a couple of really good ones. So, for example, if you were just trading here, you could have bought on this break above the hourly trigger, and you could have held this position really the entire time. All right, so let's say you were entering on this break at about 728, and then you would have been out at 12. And, you know, pre-ape, that was a really nice move to be a part of. And then you would have been out of your position here at around 12, you know, and then you would have been protected from this whole downslide. You would have been protected from this whole downslide. And then, I mean, this has just been nasty, but you could have been protected from this entire thing as well. But here is how we find market bottoms. And this is why I'm actually bullish in AMC right now. So I'll show you guys what I'm seeing. So I'm sure by now you all know I talk about bullish divergence all the time. So take a look at this really beautiful example of bullish divergence. Oh no, did we print a new? Okay, let me check something. Let's go to the 2-week chart. Bullish divergence is how to really make money in the market, because a Nimoy can show you a bottom while everything else just looks so bearish. But let's see if we made a new extreme print to the downside. Okay, so yeah, it's blur for all of us, anonymous bloomer. Just give it 1 second, and we'll fix that right up. It's just being a little glitchy right now. Okay, so looks like we actually didn't have bullish divergence at the end of the day. Wow, that's disappointing. So, but let me show you guys what I was watching. So you see when price is at 642 here, the hourly velocity is negative 0.049. So when price makes this new low at 630, but the hourly velocity moves up instead of down, that's your first sign of bullish divergence. So in short, if this move down was bearish, right, if sellers were in full control, then you would have seen the hourly velocity make a new low. So this is negative 0.49. You would have seen velocity print anything greater than negative 0.49. And then when price makes another new low here, again, you have your second bullish divergence because velocity is not making new lows. And when you have your third new low here, if you would have had bullish divergence, so you could see the hourly velocity is negative 0.53. Hold on 1 second, actually. So if this print right here would have been less than this, okay, you would have had your magic number 3 divergences, and AMC from this bottom at 566 would have rocketed out of the hole and attacked this hourly trigger. But instead we got an even deeper print. Now the thing is, sometimes you get these capitulation washout moves where the hourly velocity prints so extreme to the downside that it's also bullish. Now this is how to look at that. So there's 2 ways to mark a bottom. You have 3 bullish divergences, which would have been 3 new lows after 642, each with less negative velocity than here. So this is a great example. This is a great example. This isn't because velocity made a new low. But sometimes you get something called a capitulation. So all the bullish divergence does is tell you when the sell program is going to turn off. Now, the sell program turns on when price sells below the hourly trigger. And when you have 3 bullish divergences, that tells you that the sell program is over. But sometimes you can have a capitulation washout low where the hourly velocity just prints so extreme to the downside that it's almost as if they unloaded everything at once. And that's also another tell at a bottom. So I was looking to go long at this low if we would have had our magic number 3 bullish divergence, but we didn't get that. So instead, I'm just going to wait until price breaks above the hourly trigger at 625 before I think about going long. Jazz says, any thoughts on the rumor that GameStop can't do anything regarding this stock split for 90 days, which is the 19th? We will find out in 7 days. Mark Anthony, do you have a price target for AMC or when pretty much the signal triggers? So if you want a squeeze type move, if you want a really big move, this is what you should look out for. So all you do is create a free Nimoy account, and then you look for the hourly trigger to cross the daily trigger to the upside, and that's kind of your signal to go long. So look how that worked out over here. Okay, so the hourly trigger crosses to the upside right here, and 640, you could have rode this all the way to 13, which is more than 100% move in a stock. Can't even imagine how much options went up. I mean, I can because I rode this entire move long. Because once you get these crosses, man, the hourly trigger, daily trigger crosses, those are really, really strong signals. Like, let's take a look at BBBY for a second so you guys can understand what I mean. So BBBY, right? The hourly trigger is below the daily trigger, bearish, 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 bearish. Take a look at the daily velocity. And then we see our magic number 3 divergences, which is right over here. Let me just bring it up for you guys. Oh no. All right, let me do this one more time. So here's your, most extreme print to the downside. And then you get one new low right here. That's your first bullish divergence because velocity doesn't make a new print to the downside. You get your second bullish divergence right here and your third right here. So that marks the end, that marks the bottom, that marks the end of the selling. And then here's when the hourly trigger crosses the daily trigger, right? Just at about 550. And we can see the move that the stock made after, It got the trigger cross and then literally to the moon, right? To $30, $5 to $30. So hourly trigger, daily trigger crosses, guys. That's where the money's to be made. You can literally view this completely for free on the Nimoy free subscription for all the meme stocks. I mean, that's my favorite way to make money. Taking calls when you get those kind of trigger crosses and puts when they cross to the downside. If you look at GME, so all right, let's see. So we get a trigger cross right here. We get a really nice move up. We get another trigger cross right here at about 30, and price makes its way to 40. Pre-split, that's a $40 move, and the time frame is July 11th to July 21st. So in 10 days, pre-split, price moved $40. So imagine 120 to 160, how much money you could have made in options just by buying the trigger cross. So the hourly trigger cross is the daily trigger. That tells you that bullish momentum is flying into the stock, and then, you ride it up. Let's see if there was an obvious tell for the top. No, nothing obvious, but on the day trader chart, I'm sure there was bearish 5-minute divergences. And then, now look what happens here when the hourly trigger crosses down, right? This is all I'm trying to explain, is that you guys can protect yourself. You guys that are just buying and holding, you can protect yourself. You can buy protective puts on the way down. If you don't want to sell your shares, which I understand, I don't sell my shares either. To be honest, I never sell my shares. But if I see the hourly trigger across the daily trigger, I know that on a macro time frame, lots of sell programs are going to come on and drive the stock down. And so what I'll do is I'll just buy protective puts, or I'll sell calls so that I protect my investment and so that I don't sit in the market for 2 years and not make a single cent. I don't think there's anything wrong with what I'm doing. I'm an individual investor and I'm out here to protect my investment. I also really appreciate the cause and what everybody's doing to fight against market manipulation, but I'm not trying to sit here through a 100% stock decline, right? From $42 to about $25 and just, you know, bleed red every single day for, what was this, August 19th to September 7th. You know, I don't like bleeding red for 3 months, for 3 weeks. And so having a Nimoy, you can really protect yourself. So another way to be able to XLF, yo, what's up, man? How's it going? It's a funny message. This was really cool. So you guys want to see how we timed this bottom. This is, again, comes down to bullish divergence. So here's your most extreme print to the downside, -3.2. Price is at 34.90. Now look what happens, right? This whole leg is one leg down. You know, we don't call these each new lows. It's kind of like Elliott waves, where, you know, this would be the bottom, because you see the consolidation that we have here. So from this low, I would call this one the next low, not here, because this is just one leg down. So you get your most extreme print right here. You get your first new low here, 30.78, and if I remove price, you can clearly see the bullish divergence when price makes this new low. So here's your first new low, here's your second new low, and here's your third new low at about 23.64. And then look what happens to price. You get your magic number 3 divergences. You get 1, 2, 3, and price lifts up strong out of the hole. So, you know, this isn't even anything hard to do on your own. This is just, you know, you'll be able to know the direction that the stock is going, whether you have no experience in TA, lots of experience in TA. Like in Nimoy, you can learn in a couple of videos. Like the couple of videos that I put out on my channel are really all you need to know to learn how to like protect your investments, trade in and out with the hourly trigger. Currently, there's very, very little volume for GME, as I'm sure everybody here has realized. And so Nimoy is a velocity terminal, and velocity terminal has a lot to do with volume. And so the lower the volume, the lower the velocity, the harder it is for a Nimoy to kind of like track the movements. Like you can see all this movement in the hourly trigger, you know, up, down. But when there is volume, if I bring back the GME chart, look how clean it is when there is volume, and look how choppy it is when there's no volume. So when there is volume, right here, let's zoom in on this. So let's say you're buying at 23 when price breaks above the hourly trigger. You know, here the hourly trigger held because positive hourly velocity, so you're expecting the hourly trigger to hold, so it acts like a trampoline setup. And then, you know, launches all the way back up to here. Now, you guys could see some pretty clear bearish hourly divergence. So from this price high to this price high, I'll bring back price so you guys can see what I'm talking about. But you see how price was 36.11 here, and the hourly velocity was 0.8, and then price here was 36.90, and the hourly velocity was 0.24. So this was massive bearish divergence, so we knew to sell up here. But still, you could have bought at 23 and sold on this breakdown at 34. Pre-split, that's a $46 move. And then, you know, you could have been out at 34, bought back in at 31, out at 31.74, bought back in at 31.42, and then you can ride it all the way up to like 35, you know, which is really nice. And I mean, even at the top here, you could see the velocity just starting to get really ragged. So that was like your warning sign. And then you get out below the hourly trigger, buy back at 30. And then this one was really nice. So look at this, you know, you're buying the break above the hourly trigger at 34. You could ride this to 44. Again, pre-split, that's a $40 move. So the hourly trigger works really, really well when there is volume, like during this entire period. But in periods of low volume like this, you just see a lot of chop, up, down, up, down, up, down. So it's not incredibly useful for periods of low volume. And then over here, we're actually going through the same thing. So I wanted to talk about this a little bit because it is strikingly similar. So first of all, let's look at the daily velocity. So the daily velocity printed an extreme reading to the downside. And then, you know, kind of just over time really repaired itself. So it went from being really negative to less negative, less negative, less negative, less negative, and then just, you know, like a rocket ship, price just exploded out of the hole. And then over here you have almost the same thing. Daily velocity went from being really negative and then just repaired itself, gets less and less negative. Will this repeat itself? So there's also one more interesting thing that happens here, which is that the daily trigger crosses down under the monthly trigger. So you can see right here, the daily trigger crosses down, and then that was May 13th, and then about 12 days later, you get this just insane snapback over both these triggers. And then over here, we get this cross on September 21st. I mean, it does look similar, if you ask me. Yeah, so that's GME. All right, anybody have any questions? I kind of wanted to get on here and see if anybody had any questions on an EMOI, because I'd be happy to answer them. I would love for you guys to, you know, learn the tool and help your own trading. So let me know if you guys have anything. JP, you're good? Everything makes sense to you? You ready to start making some money? Any opinions on Mullen? Yo, thank you, Mark Anthony. I appreciate that. All right, so let's check Mullen. Anonymous Bloomer, my guy. Denny, tops. We could look at that, sure. So let's see. Okay. So, all right. So right off the bat, I want to show you something, JP. You see how daily velocity over here was negative 0.016, and then as price made a new low, so did the daily velocity, negative 0.18. So this isn't your most bullish sign. This tells you that price is going to keep selling, which it did. But let's take a look at this now. This might be interesting. So here's your most extreme print, negative 3.5. Safe to say that this is a new low, negative 0.33. And here's your first bullish divergence. All right, so here's number 1. We can call this number 2. So here's your second bullish divergence. You see how price makes a new low, but the daily velocity does not. And then, you know, there's a really good chance that this might be your third bullish divergence right here. So let's see if the hourly velocity matches that, right? This makes sense to you guys? Let me bring it out one more time. So here's your most extreme print at 35. 1 new low, 2 new low, 3 new low, and none of them have a more extreme print than this. So this could be your magic number 3. Thanks, Primo. I appreciate that. Love to teach. Okay, so hourly velocity does agree. So this is actually very interesting. Thanks for bringing this up. Let's see this. All right, so look at this. You get your most extreme print to the downside right here at 35. 1 new low, bullish divergence. 2 new low, bullish divergence. And here's your third new low. So we have 3 bullish divergences on the hourly trigger and the daily trigger. Let's see what the weekly velocity looks like. Wow. Okay, so check this out. So bring back the weekly trigger. Okay. So here's your most extreme print. Price at that time was like 0.86. And then on a macro scale, right? So we're not interested in micro right now. But on a macro scale, I would say here's your first new low. Okay, 0.80. So there's no new lows here. And here's your first bullish weekly divergence. All right, I like 0.80, 0.79. And then price sells and makes a new low at about here, 62, and then you get this consolidation phase where price pops back up. So we could call this a new low. I'd say this is your second one. And then this entire leg, it's one leg down. There's no new lows here. It's just one continuous leg down. Over here, you see how price stopped, shot up, came down a bit, consolidated. So that's why I call this a new low. Over here, same thing. Price caught a bottom, bounced, consolidated, bounced again, then came down. That's a new low. This is one consecutive leg down. So when this thing bottoms, right, when you see Mullen pop its head and like make a reaction to the upside, that's your third weekly divergence. Now, magic happens when you have hourly divergence, daily divergence, weekly divergence, right, all bullish divergences. And let's see what the monthly looks like. Because, you know, if there's bullish monthly divergence, this thing can explode to the upside. Okay, so Mullen does not have monthly velocity. Some stocks don't have monthly velocity or a monthly trigger. But let's see. So right now we have a 8% upside to the hourly trigger, 72% upside to the daily trigger, and 476% to the weekly trigger. So we know that price wants to attack the weekly trigger as soon as this low is formed, and we know that because of the 3 bullish divergences on the weekly velocity. A 475% move to the upside is worth leaps. Would you agree with that? Would you agree with that, JP? Because we have a 476% air pocket to the upside, I mean, this stock is worth leaps to me. That's for sure. And let me show you guys something cool, all right? So you don't believe me that this works? Watch this. Let's look at MMAT, all right, from today. All right, let's bring the weekly velocity. Okay, so here's your most extreme print to the downside. Price around that time was around 120. And then we have, right, this whole area, let's call this number 1. So this is your first bullish divergence. Price comes down. This whole area, we're going to call it the second bullish divergence, the second new low. And here's your third bullish divergence, all right? And as soon as you get the third bullish divergence, look what happens to price. Goes straight to the weekly trigger, because when you have 3 bullish weekly divergences, it means price is about to attack the weekly trigger. So look how well this worked for MMAT. Okay, this can very much work the exact same for Mullen. So I would play it with $1 Mullen leaps. Tops, let's see what that looks like. Yeah, I got no idea what the heck this is, man. I don't know what's going on here. Let's see if I can view it on the day trader chart. Oh, Tops. I actually know this stock. Yeah, this was like at like 1,000 or something, and then sold all the way down to a couple of pennies. Yeah, I don't know. This is really, yeah, lots of reverse splits. So this is going to be really hard to track for me. Sorry about that. Anybody else have anything? Otherwise, I'll just wrap it up. And thank you all for joining. Wait, let's take one more look. Okay. Okay, Denny, check this out. So this is going to be hard to see exactly, but you see that as price is making new lows, the weekly velocity is diverging bullishly, and then price attacks the weekly trigger. So let me try to zoom in on this period all the way right up to the spike. Okay, wait, that didn't work. 1 second. Okay, this is a great example of weekly bullish divergence. So here is here's your most extreme print to the downside at 0.38, and the weekly velocity is -3.5. We make a new low here, 32. That's your first bullish divergence, because notice how weekly velocity doesn't make a new low. And then we come down here and make a second new low, 0.26. And then look at what happens after we make this third new low, but the weekly velocity does not make a new extreme print to the downside. Price attacks the weekly trigger. You see that? This is why, you know, weekly bullish divergence these are very worth playing 100% of the time. Hit or miss, they're always worth playing. All right, so here's your most extreme print, price at 39. Price makes a new low to 32, first bullish divergence. Right, you see that bullish divergence? Weekly velocity is getting better, but price is getting lower. And then you make another new low, and then as soon as you make this new low right here, price just attacks upwards. So if you're watching the weekly velocity through this whole move, and let's see if the daily velocity was telling also. So yeah, the daily velocity was very telling as well. Let me remove the spike so that you could see it drop better. So here's your low at 41. All right, Denny, check this out. This is your most extreme print to the downside. You get your first new low here. That's your first bullish divergence. Your second new low here. That's your second bullish divergence. And as soon as you get your third bullish divergence, you get these powerful, explosive moves to the upside. Now, if I was playing this, so I'm long above the weekly trigger. And then if I zoom in here, I'll bring in the hourly trigger, and the hourly trigger would be my stop loss. So I would have been long at about, let's say, 0.53 if I would have just bought this over the weekly trigger. Or, you know, I could have bought it at 15 cents when I saw the 3 hourly divergences, the 3 weekly divergences, and then I would have been riding this the whole time. All right, so 12 cents, no reason to sell, no reason to sell, no reason to sell. Over here, we're expecting the hourly trigger to provide support because we're just coming off tremendous hourly velocity to the upside. But as you can see on this tap, the hourly velocity is getting weaker and more ragged. And then when price breaks through, I could have been out right here at 7.18. But I'm long from 0.15 cents and I'm out at 7.18 in the span of September 22nd to October 10th. All right, in the span of less than 3 weeks, I went from 0.15 cents to $7. That's a tremendous, tremendous gain. So, you know, that's 3 examples already of how well weekly bullish divergence can work for you. How far out for the calls on Mullen? You know, we can see all these divergences forming on Mullen, on the hourly, on the daily, and the weekly. So you know that there's a really big chance at a powerful upside spike, you know, to attack the weekly trigger, which is a 476% move. So why time it? You know, why sit there day in and day out watching for it to move up a couple of cents? The way I personally would play this, I would just take $1 leaps out in January, maybe even February, and I wouldn't check it again. I would just set a price alert at, let's say, 50 cents, 60 cents, 70 cents. If it hits, great. If it starts moving up, I can maybe add to my position because I know that price wants to attack the weekly trigger. But when you have a 476% air pocket, instead of trying to time it, you know, with short-dated calls and go closer to the money, I like to just give myself 6 months because I already see what's going on here. All right, what is the weekly velocity telling us? The weekly velocity tells us that elephants, all right, the big guys, are stepping in and buying the stock with each consecutive low. It is impossible for price to make new lows without weekly velocity making new lows unless buyers are stepping in with big pockets. And if they're buying, I want to be buying. But I have no need to time this move. I like to be really comfortable, give myself all the way out to January. I actually do have Mullen leaps at the moment. Full disclosure, I think I have 1.5 leaps. But yeah, that's how I would play it. Matt Burrows wants to look at CCL. Let's take a look. Okay, so, price just popped above the hourly trigger and is now on its way up. Let's look for any signs that this was going to happen. Okay, so here's when price sold under the hourly trigger. Now again, I've never taken a look at this stock on a Nemo before. Let's bring up the hourly velocity. Here is your most extreme print to the downside. Price is at 741 and the hourly velocity prints negative 1.3. All right. Here is your first low with bullish divergence, 685. And you can see the hourly velocity is not lower than here. Then price comes down and makes a new low right here, 658, and you get your second bullish divergence. When price makes this new low, that's your third bullish divergence, and here's where I would be going long with a 10% stop loss in case something goes wrong. But Nemo has a pretty good track record. 3 bullish divergences, 1, 2, 3, and you're off and running. So I could have went long on this low at 625 when nobody else can see this, and I'd be sitting pretty at 731 in 2 days. So 625 to 731 in 2 days. That's a really nice move to the upside. Let's look if the daily velocity was telling. So here's your most extreme print to the downside, 692, and the print was negative 200. And then, you don't have 3 divergences, but you definitely have 1 strong divergence right here. Price makes a new low. Daily velocity does not. And you definitely have 3 divergences on the hourly, 1, 2, and 3. So, this does make a nice long. Let's see if there was any weekly divergences on this move down, because if there is weekly divergence, then that would tell us price wants to attack the weekly trigger, which is at 1163, which is a 59% move to the upside. So, if price wants to attack the weekly trigger, this could be very well worth playing. So here's your most extreme print to the downside. Price was at 965 at the time, and here's where the weekly trigger posted its most extreme low. Here's going to be your first bullish divergence. Here's going to be your second bullish divergence, and here's going to be your third bullish divergence. The only problem is the weekly velocity doesn't look that great where I'd super confidently say that we could run to the weekly trigger, but you do have 3 bullish divergences for sure. Here's your most extreme print. We're going to count this new low as 1, and then we're going to count this new low as 2, and then we're going to count this as 3. So, could be when price breaks above the daily trigger, which is currently at 845. Once price breaks above the daily trigger, that could possibly bring a move to 1163. Currently, the daily trigger is 15% to the upside, so that poses a nice risk to reward if you use the hourly trigger as your stop loss. So if I was assessing this stock right now, and I wanted to, let's say, go long or short, so price is at 731 right now. I would be out below 690, and if I was going long, I would be targeting the 845 daily trigger for my exit. Now, we could see closer for best entry, we're going to look at the day trader chart. So first of all, you can see this beautiful break above the hourly trigger right here at 670, and now price at 730, so this would have made a great long. So let's look at a couple of things here. First, you have the rejection of the hourly trigger. That's normal because you're coming off some pretty negative velocity. You're definitely going to expect pinning at the least. Now look what happens here. All right, do you see how price breaks above the hourly trigger but velocity is still negative? So what this tells you is that this isn't a runaway move to the upside yet, because velocity is negative here, negative 0.005. The negative velocity tells us that this entire hour, price wants to pull back into the hourly trigger. But do you see when price comes up here and pops above and the hourly velocity turns positive, that's when you have positive hourly velocity on your side and you could go long. Now notice something very interesting about this move. You see how the hourly velocity keeps rising to the upside? So before each hour is when you get your hourly velocity print. So currently right here when price is at 689, at 11:30 Eastern time, you got your new hourly velocity print. And you can see that the hourly velocity print is greater than the one you were just in. So you knew going into this hour that you're going to have better hourly velocity, and it's predictive, right? Nemo predictive technology. And price ended up lifting this entire hour. Going into this hour, you knew you had better hourly velocity, and price lifted this entire hour. Going into this hour, you knew you had better, and price did a really excellent job at consolidating, and then you got your another higher print, and price moved even higher. And then when the hourly velocity started dropping, price started coming down a bit. You could have played around with the 1 minute trigger and the 5 minute trigger, so you could have went long above the hourly trigger, and then just used either the 1 minute trigger or the 5 minute trigger as your stop loss. If you're in this really quickly, then you could have went long on this break above 670, and you could have sold here 720, right when price fell below the 1 minute trigger. If you want to be a little more conservative, you could use the 5 minute trigger as your exit, and you'd still be in this play and long at 732 with your stop loss right below 726. Now, I could also drill down into the 1 minute divergences and the 5 minute divergences, and really get into this. But I'm not going to do that right now, but you all get the idea. All right, so let's just take a look at it for 1 second. Because it actually is a pretty good. All right, Matt Burrows, I don't think that's necessary. I appreciate it. All right, so we'll leave it at that. Anybody else have any other stocks that they would want me to look at? Or any other questions about how Nimoy works? Oh, JP said why 1.5 versus 0.5? Because the 1.5 calls will capture a lot more of the IV spike than the 0.5 calls. Sure, we could look at EXPR. So, for example, if you buy 0.5 calls, you're going to make money on intrinsic value, which is the value once the option is in the money, but the extrinsic value, when the implied volatility rises sharply, when price is making an attack to the weekly trigger, market makers are pricing in on an average day for Mullen, let's say a 1.2% in either direction. That's what they're pricing in when they're selling options. But when price is moving 10% in either direction, market makers boost the price of their options because they don't want to lose money selling them. And so the further out the money you are, a couple of strikes out, the IV makes the contract way more expensive than if it was just a 0.5 call. EXPR, so beautiful daily bullish divergence right here. So here is your most extreme print to the downside. And price at the time was 140. So here's your first new low. All right, we'll call that bullish divergence number 1. And then this is one leg down. So here's your second new low. We could call that bullish divergence number 2. And then here's your third new low. So on the third new low, notice that price rises up to attack the daily trigger. It probably wicked up to 133, but Nimoy only tracks the hourly close. And then it happened to get rejected, but you can see again, perfect example of 1, 2, 3 bullish divergences, and price makes that move up to attack the hourly trigger. Let's zoom out and start off at the monthly velocity. All right, so monthly velocity is telling us there's a large, a lot of negative forces on the larger time frames in this stock, but sometimes the lower time frames can turn the monthly. So I'm not seeing anything particular that stands out to me here. You see, when we had this extreme print to the downside on the weekly trigger, and then price made 1, 2, 3 new lows, price already attacked the weekly trigger, so it resets. But again, do you see how beautiful this worked? If I zoom into just this time period, if we were trading this back then, all right, and we were all on here, and I'm watching this, so I see this most extreme print. Price makes a low of $2, and then we make a new low of 186, bullish divergence, a new low of 168, bullish divergence, and another new low of 166, 3 bullish divergences on the weekly, and then you get this snap up to the weekly trigger. And now, again, a lot of the times, once you have your weekly velocity divergence, the price only really attacks the weekly trigger when you get this crossover. And you can see you get this crossover, And after important crossovers, you usually have a snap back down to these triggers before lifting up. So it works crossover, you get a strong snap back down. You can buy right off the daily trigger with a stop loss right below, and your target would be the weekly trigger right here. So for XPR, I'd just say this, watch for a move above the daily trigger, watch for the hourly trigger to cross above the daily trigger, and then I would be personally trying to take that along to the weekly trigger. All right, let's wrap this up for tonight. Thank you guys very much for tuning in. Wait. Yeah, I mean, we went over the daily velocity. The 3 bullish divergences on the daily velocity. So price attacked the daily trigger here, and that was a nice move off the 3 bullish divergences. Thank you, JP. I'm really excited you decided to join us. Let's see if we can make some money over the next couple of weeks. A lot of great opportunities in the market today. I'm really upset we missed MMAT because I was watching that for a while, but there's always another. There's always another runner every single day. You just gotta catch them. All right, guys. Thanks so much for tuning in. If you have any questions on Nimoy, always feel free to DM me on Twitter, and we'll discuss. See you guys.